we are live now. Okay. So good morning, everyone. Friday, the 26th of September. Kind of interesting move in the crypto market in general, and nervousness creeping in, not just in crypto, but in other things as well, in other markets as well. And let's go and start and look first of all at the economic calendar. Okay, so what we had this week, there's nothing really major. We had some kind of manufacturing figures. The major thing was probably the Swiss franc, interest rate decision. They kept interest rate at zero. The last thing last week after the call, I'm thinking it was, the announcement by the no, that's sorry. We covered last week. So yeah, the mainly was
Get down.
by the Swiss bank.
Get down.
The revised GDP figures quarter on quarter were actually very complementary to the US economies. Like in the last quarter, the economy grew by 3.8%. This is quarter on quarter, okay? It's not yearly figures. And unemployment claim was slightly better than expected as well. And today, in a few hours, we have the PCE price index. So it's just another inflation measure. That's the main inflation measure that is used by the Fed. At least what they look at a lot, determining kind of interest rates. And going to forward in kind of like next week. Again, let's have a look. So we have the rate announcement from Australian dollar, and not really much else. Not really much else going forward. Okay, the only thing again on Fridays, like the beginning of every month, we got the non-farm payrolls on the Friday. So the big monthly figures about job creation in the US. Okay, let's have a quick look, just a bit more granular to the numbers that were announced on Thursday. Okay, Google price index. Sorry, there is so much in here. As you can see, this is a lot more granular. So I just need to update it. All right, let me see. Okay. So we can see that the kind of the growth rate here quarter on quarter, the expectation was about 3.3%. It was up to 3.8%, and also at the numbers from the quarter before, they were revised up. Slightly. So everything kind of like ticked in the right direction. And this, so we'll wait for confirmation kind of like today of especially the inflation figures, to see if the inflation figures will be very important for the speed of interest rate cuts. Okay, so elevated inflation might put the brakes on the number of cuts that we're going to see now in the next 2 or 3 months, where kind of like numbers that are kind of either stable or slightly down, would then pave the way for more interest rate cuts, because at the moment kind of we are at 2.9%. The goal is to reach 2%, but obviously any interest rate cuts put more pressure on inflation. Okay, so the Fed is very keen to see these numbers like do not start to push up, because otherwise, it will put pressure on them at a later date to start raising rates again. And at the moment, they want to they want to lower rates to stimulate the job market that is showing signs of weakness. So what happened? What happened over the last week or so? So as you can see, so this is where this today is Friday, Thursday. So 1, 2, 3, 4, 5, 6, 7. So this is where we were last week. Friday we were between 115 and 117. Price have declined quite sharply this week, and they are rebounding. So they plowed right through these two. Maybe there was a reaction here at this upper demand zone, where some profits could have been made. But at the moment we are back at, so this kind of like green and orange line, this is the weekly swings. Okay, so they are, you can see them clearly when you look at the weekly chart. We're looking at daily here. So, and this is basically the lowest that the market has got to. And when we hit a new all-time high, then the market started going into a downtrend. We now have interrupted that downtrend here. Okay, so by closing here for a couple of days above this point, the downtrend is now terminated. It doesn't mean that we have a new uptrend, because there isn't really an uptrend showing. But what we are seeing at the moment, there has been like a pullback to this level of demand that's shown, has pushed us up from 107 to 117. Now, what happens at this point, really, in the next, could be today, could be in the next few days, could determine then the short-term price activity that we're seeing in the market. So if this gets broken, especially when I say broken, I'm looking for at the very least a daily close below this point, okay, below this 107. If that was to happen, I would say that then that would open the way for the market to pull back until the next level of demand, which which for me is represented by this green line here, which is the area between 97 and like 98 and 93,000. Okay, so, and it still take us, even that wouldn't be unheard of in Bitcoin terms. Even at the bottom of that would be 25% pullback. Okay, so even in during this cycle, we had already experienced pullbacks. Generally smaller than this, but we had this in 2025 already, which was like 32%. When we first went beyond 100,000, we hit a high of 107. That was in January. Okay, and it took until May to then move back above that level. Okay, so these things can happen. 25% wouldn't be the end of the bull cycle or the beginning, or anything to worry about too much, especially when we zoom out and we look at the monthly chart. This is kind of like a very healthy very healthy monthly charts, and kind of the bear market would be indicated by moving kind of below 75,000 at this point. Okay, so there's nothing to worry. We've had, as you can see here, 1, 2, 3, 4 months of continuous growth. I think I'll just remind you that this is the record. 1, 2, 3, 4, 5, 6, 7 months of growth is the most has ever happened in Bitcoin terms continuously. So, we've had here 1, 2, 3, 4, one pullback at the moment. The current month is green, but it still remains to be seen. Okay, the low was about 107. We're not that far away from it now, so anything can happen. The one thing I remind you, though, which is on a positive note, is so when you look at months, let's look at some of the previous years' months. Generally, is we are referring to let's say what they call it October. Okay, sorry, let's start again. So this is October 2024, October 2023. Where are we? And and this is kind of 2022 when we started seeing the first signs of the bear market coming to an end. So generally speaking, apart from the last the last year of the 4-year cycle in Bitcoin, and obviously 2021, sorry, 2020 that is, so it's 2021. So 2020 was actually the beginning of the real strong bull market, that where price went up by 500% in 6 months. And 2021. Okay, so as you can see, this is why it is referred to as October. So generally October represents a pretty good time in Bitcoin, in the Bitcoin world. Okay, and as we can see the last 1, 2, 3, 4, 5 years that all been kind of like even during the bear market, we still had a small profit in October. So I consider this at the moment kind of like just a normal pullback in the market. And I remind you that at this stage the majority of Bitcoin holders are holding Bitcoin at a profit. Okay, and there's also the other thing to consider is some of the activity that's happening now with all the Bitcoin companies. They are trying to imitate MicroStrategy, so become Bitcoin holding companies in a way. And a lot of these companies are issuing stocks at a discounted price, and they generally have got like a lock-in period. After the lock-in period um, finishes, and a lot of people just are sitting on the price of these stocks while the inflated prices don't want to realize that gain. So on occasion, obviously, that causes a little bit of sale of Bitcoin. If we go and have a look at the usual charts that we look at, so these are friends, the Nupal. Okay, net unrealized profit and loss. So again, it's showing that at the moment we are at a very healthy 50%. So I remind you that the real kind of like worrying level for this chart, which has indicated the top of markets in previous phases, are when we reach the greed or euphoria phase, that is over 75%. At the moment, we're sitting about 50% between basically the third and the fourth band. We can't even see the fifth band here because it hits so rarely. But that's the moment where we would be able to see that the market is overheated and we might want to think about exiting. And if we look instead at the other chart, which is the realized price chart, you can see the price is climbing like it does pretty much every week that the price is above that line. And I remind you, this can pretty much indicate a bottom of the bear market during this phase. They're about, give or take, about 15% from that point. So I would say, you see, last week was what, 53.4, I think, last Friday. So every week it goes up by a little bit. Okay, because any trade that happens right now happens at, obviously 109, 110, and the average is a 53. So the more this lasts, the more the average will go up. And since the bottom of the market, that level was at around 20,000, the realized price. So in the last couple of years, it's gone from 20,000 to 53. So almost, give it a few more weeks, that would have trebled during this cycle. Okay, which is interesting. And in terms of big institutional investing, let's go and have a look at the ETFs. Okay. So you can see, obviously the prices have declined. There has been a outflow from the ETFs this week. You can see this Monday, Tuesday, Wednesday, Thursday. So 3 days out of the 4 they were they were outflows. Funny enough, kind of like the BlackRock fund is going in the other direction. So we're still seeing inflows, okay, where pretty much all the other funds are seeing outflows. So even the last, during the 3 days, we had zero on Monday for BlackRock, positive on Tuesday when there's still outflows, and even yesterday, 79 million is the only fund that had the positive inflows. It shows you their power in the market and how much also they're pushing. They're pushing for Bitcoin through the army of advisors. In the Ethereum ETF, that's a little bit more selling pressure, as we have seen. Ethereum has even broken the $4,000 barrier this week. So yeah, there has been some pullbacks. Obviously when people get scared, they can take the money out, and they have been. The total is still very, very positive. So we are talking and again, if you see where the outflows are coming more, the bigger numbers, you can see that BlackRock is holding steady pretty much. So they had a little outflow this week, but compared to Grayscale, Bitwise, Fidelity, they all have had big outflows, where the kind of BlackRock has actually held the market a little bit steadier. Okay, so some of this may also be readjusting, moving things from one fund to another. But for this week, mostly has been especially for Ethereum, has been a consistent outflow. As you can see, 60, 80, 110, 130,000 Ethereum have actually been sold off from the ETFs. So this is where, by the way, so the ETFs can be a good thing or a bad thing for crypto, in the sense that this is where a lot of liquidity has moved, and this is where a lot of the trading now occurs, because it's made it possible for for individual investors that are not kind of that familiar with crypto. They can still speculate on it without having to worry about wallets and and security and all that stuff. They can just click a button like they do to buy any stocks and shares, but they can buy crypto ETFs instead. Okay, now let's go into a few bits of news before we move on to question and answers. Now, Kraken, again, one of the largest crypto exchanges after Binance. they already raised 500 million at a valuation of 15 billion, and they're planning to do an initial public offering in 2026. So this will follow basically the example of Coinbase. And Kraken is already, for those of you that don't know Kraken, it's, out of all the crypto exchanges, there are some that are invested more heavily into compliance and regulation, and some that instead are on the other side of it. Although every single exchange now is converging towards compliance. Kraken have been with Coinbase at the forefront of it. So they are the ones that are more, even even for you guys, for example, in Australia, there are know that many people in Australia have had problems with their banks and moving funds between banks and crypto exchanges. Kraken is one of the ones that are more bank friendly, because again they do more compliance, and they will do even more after launching the IPO, because they will be then in a regulated market. Okay, they need to obey to um, to a certain level of compliance. And this is why also, funds and shares like this being in regulated market makes investor little bit a little bit safer from that point of view. Okay, moving on. So this is kind of like a big news that's gone in a little bit quietly, I will say, from the back door, so to speak. Google buys a 5% stake in a Bitcoin miner. So saying that Bitcoin, they didn't want to kind of like commit to Bitcoin. Okay, so they are though entering the Bitcoin through the back door, through mining. They don't want to invest in Bitcoin directly through the treasury, but they are keen to to take a stake. So it is like this is one of the comments here. This is not taking a 5% stake in a company like this. It's not just a whim. Okay, it is a strategic investment. Okay, so it's really big for the crypto world in general, because you can see that you can see how the big tech companies are moving in that direction, although they don't want to take sides too much, so they are doing it kind of like in a backhanded point kind of way. On a completely different note, China is then starting to raise the stakes on CBDC integration. And so part of this, so they're making the yuan digitally available, and so they're starting to use it a lot more for cross-border payments. So they are trying slowly to move away from the US dollar. And so this is a move to start using the Chinese currency instead of US dollar for international trade. And especially at the beginning, this will be in the what is called like the China belt. So all the country there on the periphery of China that they are trading with. And over time, this will be extended to a lot more of the trade, the countries that they trade with, because it would make this move will make it possible for investors from the outside to actually use the Chinese currency, which have been very highly restricted until now. So this is again another article on the same thing. Where are we? So you can see why the markets have been nervous and everything whenever Trump and tariffs are involved. So there's been like another wave of announcements of tariffs to take effect from October the 1st. Okay, so So let's see. So there are especially on pharmaceutical, imported pharmaceutical, unless companies are building manufacturing plants in the US. So there's lots of different tariffs, like things like kitchen cabinets, et cetera, et cetera. That upholstered furniture. So all things that will bring the first thing that will happen is that will bring costs up because until this company could, if they want to relocate to the US, the manufacturing to the US, in the short term, it will take, it will bring the costs up of anything that is imported in the US. And this is not, so at the end of the day, who's paying for this? At the beginning, we'll see on the long term, but at the beginning it will be the buyer, the people that buy these products because the companies, no company will be able to absorb, a 25 or 30 or 50% tariff on their product. It will be kind of economic suicide. So this is one of the things that is affecting the prices. And when we look at things kind of like nervousness in the markets, we're not just talking about Bitcoin, but there are at the moment you can see as well on the Nasdaq. The Nasdaq, we were talking about before, technology is probably where the first cracks will start to appear. Although we are still close to the all-time high that was hit only on Monday. We are starting to see on the lower time frame. So we can see here, this is like a 15-minute chart. So we can start seeing some familiar shapes taking place. So what is this for you? Okay, so this is like the start of a downtrend. So this is at least on a smaller time frame, and yeah, bear in mind this is a 15-minute chart. So as we go up the time frame, it's still visible on the 1 hour chart. It's still visible on the 4 hour chart. Not so much on the daily. The daily is just showing a decline, but still, it is noticeable because the market has been just going up and up and up and up for so long. So to start seeing already, high, at the moment, what we have expected to see like a pullback and then a new high. Instead, what we've seen is like a low, lower high, lower low, lower high, lower low. So what would be the expectation now? The expectation now is, again, when there is a trend, you follow the trend until it stops. So the point is, from where we are now, we would expect then to create a new low. But if we were to then break this point, then this mini downtrend would have been terminated, and then we would expect to start moving higher again. So at the moment, it's still everything is very uncertain, but what we can see is that over the last few sessions, so Tuesday, Wednesday, Thursday, the prices have started moving lower. Okay. Then what happens over the next days and weeks remains to be seen. But this was the day of, so this Wednesday the 17th, so this point down here as well, if you're looking for confirmation, something that could be significant. This is the low that we hit during the interest rate announcement on the 17th. Okay, so if we were to break down below that, then we might be looking for a kind of significant correction. Right, at the moment, it's just like a few sessions, like 3 days, but we'll see this could bring like a correction of a few weeks. So we'll see what happens. We'll see what happens. At the moment, what I'm expecting to see is to kind of cool down until pretty much the end of the year before the real fiscal tightening is loosed up. and then we can really see like a 2026. I would see we will see probably the markets heating up again, and probably overheating by mid mid 2026, mid to late 2026. The effect of the lowering of the interest rates will really be felt, and then probably everything, all the risk assets, may boom, but in the short term, over the next 3 months, we probably see a little bit of cooling down. Okay, now Let's stop sharing. See, have you got any specific questions? Practical or non-practical, or anything that you want to talk about crypto or the economy in general. And I just remind everybody, because I know that talking to Eric last night, so hopefully Eric, everything is going on according to plan with your midnight claim. But you got another, Jonathan, it's about 10 days or something, I think, to claim midnight. So if you want any help, then remember that Jonathan does a session after this. So he can guide you through kind of you late comers, to getting your claim through before it's too late. And I noticed, like I was reading on some posts as well, that there are some of the Trezor changes have actually come on board. So things are gradually getting a little bit easier, although it's still not a simple process by any means to go through that claim. But I'll just remind everybody that if you hold Cardano and you had Cardano in a wallet, not on an exchange, on the 11th of June, you had more than $100 worth of Cardano, then you will be entitled to get a free airdrop of Midnight tokens. Okay, so if you did, then make sure that you do claim. And we'll see what, I mean, it's free, so it can't hurt. You don't have to pay anything to claim. And we don't know what the tokens are going to be worth when they are actually generated, which will take, Jonathan, another 60 days roughly after the initial claim is finished.
Yeah, we've got a scavenger phase after this. So we've got another 8 days of this claim period. Then we go into a scavenger phase where prospectors can come and try and win some night tokens that haven't been claimed. And then after that, there's a token generation and distribution event. So I think it might be just 30 days after.
38. Okay, 38 days. Oh, that's a curious thing. As we, if there are any questions, please raise your hand. Eric, you have a question?
Yeah, you're talking about Cardano, but there's also, if you hold Bitcoin or Ethereum, you can also claim.
Mm-hmm.
Is
Yeah.
there also a limit? Like you said, $100. Is there a limit?
Yeah.
Yeah. So if you've got $100 of Ethereum, Solana, XRP, BNB, Binance Smart Chains coin, AVAX, or Brave token, $100 of those on the 11th of June, you can claim free night tokens.
Thank you very much.
Yeah. So just Jonathan, let's say if there are no questions, so please feel free to unmute yourself and ask questions if you are any. If you don't, I was going to ask Jonathan something. So how easy it is to participate in the scavenger phase?
We don't have full details yet, but it looks like, so obviously there's going to be some complexities with, if you're not into Cardano already, you need to get yourself a Cardano wallet. But it looks like it's just going to be some software you'll run on your machine that will then carry out some processes. I don't know what the runtime for that software will be or anything, but the scavenger phase is purported to be quite straightforward. So,
Oh, good. So maybe by next week we should have some details, because by then it should be just about to start. So maybe you can we can tell people what to do. So even if you didn't have any of these tokens on the 11th of June, you can still be able to get some free midnight tokens by participating in that.
yeah, and I don't know whether it's going to be the software is associated with one wallet, probably something like that, or one IP address. So it will be something that they probably want to be distributed rather than then we just set up a big miner in Amazon Cloud or something. But yeah, we'll see.
Obviously, out of all the wallets, probably Lace is the one that would where this kind of software will run probably more easily if it needs to be, because it's a software developed by input output directly. So yeah. So if you don't have a Lace wallet, just maybe it's a good idea to start the downloading one. It's a signature, does the same thing that Eternal does, but on top of that, it also works as a Bitcoin wallet. So you could hold your Bitcoin on Lace as well if you wanted to. And again, the same as Eternal, you can connect it to a cold storage wallet to approve any transaction. So there is that functionality as well, just in case people start getting worried of especially Bitcoin maxis. Not that we got any here, but the Bitcoin maxis having the Bitcoins anywhere else but on a Bitcoin wallet, kind of like is really like would be like an insult.
So did you set up a Ledger wallet through Lace?
Yes.
You've done that now, and that was smooth, was it?
Yeah, it was very, very easy. So you just go into, when you create an account, and then there's a, there's a thing. So if you have a, Ledger or Trezor, you can just click on that and connects you directly.
Okay.
So as long as you have your Ledger connected, and just it finds it straight away. So it's very, really straightforward.
Very good.
Eric, go ahead, please.
I've got Eternal. Do I need Lace to download? Or can I do it with Eternal?
What for?
Claim the Midnight tokens from
can.
Cardano and for also the other ones. That's okay.
So depends on what you're looking for. So for Cardano, you can use a number of Cardano wallets. You can use Eternal as well.
Yeah.
And it works, with Ledger. I think it now works with the Ledger Live as well, even without one of these. But for the other tokens, it depending on where you have them. So you might need to have a Solana wallet for Solana, another type of wallet for the other chains. So really it depends on which chain you are claiming for. And if you go to the midnight claim site, which is midnight.gd, there is a list of per token the wallets they are supported for the claim. So it does say, so if a lot of, for example, for all the Ethereum chains, you can use MetaMask. But obviously MetaMask doesn't work for Bitcoin, it doesn't work for Cardano, it doesn't work for Solana. So it's really depending on the coins that you had, and if you add them on a wallet or on an exchange.
Like I have it on Ledger.
See, on Ledger it should work, but do check, because again, so not all the integration work for every single coin. So for the same thing that you're doing with Cardano, that you need to have, yes, you have them on Ledger, but you need to have like a Eternal as well. You might need to download, a Solana wallet, for example, if you had Solana, and connect it to your Ledger account.
Okay. Thank you very much.
It's okay. This is what kind of like we were discussing, and this is the unfortunate thing of crypto, and the way that sometimes crypto people don't live in the real world, because if this is to be like the first time somebody has ever accessed anything to do with Cardano, they won't make it think, oh, this is easy, I can do that. No, it's not a good first impression, I must say. So I think it would. This is where I always thought that it's good if crypto projects spent a little bit of money just talking to real people and making them test and crash stuff, because they don't realize that, not everybody's like them. And what can be easy for like for a particular developer for a particular blockchain is not easy for everybody else. And if we having trouble with this, and we've been doing this for years, can imagine somebody that doesn't even know what a wallet is, or has never heard about half of these chains, all the troubles that they can have. So it is unfortunate. It is really unfortunate that, but it can still got potential to do great things, but it needs to be, the user interface definitely needs to improve. If you want to attract, the next few billion users to crypto, we need to have a way of interacting with it. There's far easier than that. So let's learn from, what I would say, let's learn from the people that are already doing well. So who has got the kind of Robin Hood of this world, look at their apps, look how easy they are to use, the eToro and all these like trading apps. They have spent a lot of money in making it easy for people to be able to do things in a few clicks. And we got to get to that point as well with crypto. Otherwise there is no, real mass adoption until that happens for me.
Yeah, definitely. The user interface is a key part that's still missing from most apps. Things are improving. There's lots of tools now that will let you do custodial wallets that are storing the seed phrase in the browser, so it's like a browser-based wallet. But you don't have to be exposed to storing it and saving it so much. This is quite contentious amongst developers, because obviously we want people to keep hold of their keys, otherwise there's very little point in doing any of this. But also we need it to be a slick interface, and no, it's tricky. If we do have more Robinhoods, then it's just Robinhood that's holding your keys. So we haven't really moved on from the banks holding your keys, or Google or Facebook, or so. Yeah, it's a puzzle that's still to be fixed. That is interesting. And if there was no big technical hurdles, then us early adopters wouldn't feel smug and self-satisfied.
That's very true. That's very true. But it's also why there could be some, like payback in a way for early adopters, because you have to go through quite a level of pain.
Yeah. With the icebreakers strapped to the front of the ship.
Yeah, no, exactly that. But I remind everyone though that, not necessarily being the first at doing something, it's the best time to do something. So it is good if you learn something, and because you are ahead of the curve in that way. But necessary from an investor point of view, it's not necessary to be like on the first one when something is launched to be the first one to buy, to queue up in front of the shops to buy that new book that's coming out. There's no need to do that, because often there are like pullbacks very, very deep. Like, look at Amazon. Look at Amazon going from nothing to $100 and then dropping to $4. So yeah, it would have been very difficult to be an investor, an early stage investor in Amazon, and still have held onto your Amazon shares when it dropped 96%. But so if you never had bought the Amazon shares to begin with, you could have bought them at $4. That would have been an amazing buy. It would have been an amazing buy for where they are today. So there are those opportunities. There's lots of them. Bitcoin again going to 70,000, coming back down to 16. So you didn't need to buy Bitcoin in 2017, 2018. You could have bought it in 2023, for that price. So there are always these opportunities. The important thing is first of all learning, becoming used to the kind of, you don't need to become a programmer, but at least you need to get familiar with how you do things online. and then it means that you are in the right place, and you've got eyes on these assets for when it's a good time to buy, and getting the time to invest. But the important thing is just it's not just seeing this as a money gain, for profit, but to see as like what it's doing, and what's the reason why all these assets are becoming important. This is where I think where all the value is. And obviously the incentive to make money is also there. But the reason why this movement started wasn't because of making money. It was more like to get back control of money rather than anything else.
But look, when I compare it to buying bonds or or shares, I can make a stupid decision there, but I'm not losing my money while buying it, and that's the problem with crypto money. You can do a stupid decision, but you can do a stupid decision also with doing something wrong and losing the money in the process of doing it, and that has to become a lot easier. When I think that Microsoft wants me to pay the Microsoft 365 by crypto, they have to change a lot, because otherwise a lot of money will be lost, or wrong moves will be made, and so on.
Yeah. This is why they haven't. So a lot of the big companies, they haven't committed yet to crypto, although it's in their interest to do it because they would save a lot of money in fees. But they haven't done it yet because it's not quite clear who the winner is. They don't want to take sides, so they are wait until the legislation is all in place, and then we'll probably see we'll see if the Google, the Apple of this world, will they have their own token that they will get the users to use, or would they use what's already in the market? And even if they have create their own token, what technology do they use? Do they create a completely new blockchain? Do they use a blockchain that's already there? So there are all these questions to be answered, first. But definitely, yes, it's got to become a lot easier. But already Bitcoin is making inroads in that way, because there are now many US states where you can actually pay your taxes in Bitcoin. Yeah, so you can buy, you can pay your council tax or your state tax, not federal yet, but in a lot. So these cryptocurrency are already accepted in a government capacity in many different places, not just in the US, in many places in in other countries as well. You can use now cryptocurrency for normal payments, and they are accepted widely. So this is going on more and more and more, and the more it happens, the more you see. I can't remember which state it was. They started accepting tax payment in crypto recently. So, but it just becomes more normalized, because the moment they do it, then that is announced within that state, whether it's New Hampshire or somewhere else, it doesn't really matter. But so that means that everybody that lives in that state will know about it, because it will be announced and will be in, when you go onto the website to pay your state tax or wherever you see, you will see the option. So even people that don't know anything about crypto become more familiar with it, even if they don't use it.
Oh,
So
yeah, you can. Sorry.
no, carry on.
Where I live, you can pay tax since a long time with crypto. But what I mean is, that's one thing, but the problem is, how do I transfer the crypto from Binance, from my wallet to the tax authority? That's the tricky thing that many people don't know.
No, you don't know. I mean, if you go to your tax authority website and you say, you say pay, and you get to the screen where you say you have to pay whatever it is, like 2,000 French franc, and then you can say, well, how do you want to pay? By his bank transfer or this, and then there will be the option with crypto. If you click on that option, then they will explain, I imagine, what you need to do. They will give you the address, and also you need to pay into this address. And I think so it'd be fairly simple if you try. Just do it out of curiosity, but the next time, even if you don't complete the process, try clicking on it and see what happens. But I imagine it will be fairly simple. It's already, so I do it for example, some of the trading brokerage that I use, you can make transfer using crypto. And the way you do it is just, okay, you want to say, okay, you want to make a deposit. How do you want to make it? Credit card, bank transfer this way, bank transfer that way, or crypto. You click on crypto and say, okay, fine, what blockchain you want to use? What asset do you want to transfer? Do you want to transfer Ethereum, Bitcoin? Do you want to transfer a stable coin? And they got all these options. Then you select the one that you want and you go, okay, just use this address. And then you do that, and you use your the payout account where you got your funds, whether it's Ledger or wherever you got these funds, and then you send to that particular address. So it's fairly simple, the process. But assuming that you do have crypto somewhere and you want to use it, but it's not a difficult process. So and I do try it to satisfy your curiosity next time.
And the thing I was thinking is that actually the likelihood is that most of the use of blockchain will be underneath the hood. So it will be business to business, and AI agent to AI agent, rather than a retailer to industries. There's a platform that's just started up that's Cardano based, called Socus, or Masumi is the company, and the Endmaker team are behind it, and they let you connect your AI agent, so whether you're using Claude or any of these guys, and make use of those agents through that platform. But you never see Cardano mentioned. It's not not the payment layer and like that. It's just it's like settling on the Stripe network or something like that. So it's transparent, which is where most of the activity will happen. So yeah, we're good in the right place.
Like, was that that network in the US, Alchemy Pay? So basically, they were producing terminals to use in shops or restaurants. So they would take crypto as payment. Then the shopkeeper or the restaurant will have the option to choose, to accept payment natively in crypto to their crypto wallet, or to take in US dollars or whatever else. So it's that kind of thing. They will see more and more. So the same way that you go and pay with your credit card or your debit card, you'll be able to pay with your Cardano wallet, Bitcoin wallet, or whatever else. And it doesn't really matter. It won't really matter to the shopkeeper, because they get whatever they want. So if they want to receive pounds or dollars or whatever, they receive what they want. So the exchange will happen, at the app level, behind the scenes in Stripe, in Alchemy, or whatever system it's used. And by the way, we've had that. I experienced first Stripe crypto payment last year, so in our business. So it's fine. The fees are still kind of astronomical, but
yeah,
it'll get better. It will get better with time. All right, guys. I need to go because I've got another call starting right now. So I wish you all a fantastic weekend, and just remind you, just move over if you, especially if you got any specific issues with Cardano, and you want to know what happens behind the scenes of a cryptocurrency ecosystem and exchange. Just Jonathan, as usual, put the link in the chat box for his Cardano-based session, and we'll start in a few minutes after we close this call. So I wish you all a fantastic weekend. See you again next week. Bye, everyone.